second video of the weekly market recap, and
we're back.
Yeah, we're back.
Crew. Back with the weekend watch. No, I'm kidding. Weekend watch was video.
We can run it back.
No, this is good.
Right.
Yeah, we're back and live. Bitcoin is breaking it.
Put in options, big options.
Big options going out to 2020. $20,000 Bitcoin, here we come.
Put my tuition on 2022.
took out a loan.
50K.
50K, there you go.
Expires in 2 years. Boom.
But no, had a nice close to the week where started to see some increase in breadth. Where our past video, we're talking about how it was ugly. It was ugly out there. A lot of the growth names were just breaking down, and especially software kind of been the darling child of the growth names. Just on a relative basis, IGV over SPY continues to go down. Saw a little increase towards the end of the week, not necessarily in software, but just kind of an overall breadth with 52-week highs starting to increase more and more. And even in the model that I went through this weekend, there was a 400% increase in 52-week highs versus 52-week lows. There was about 52-week highs across all stocks and only 23 52-week lows. So that was a huge increase week over week, especially compared to last week where it was basically 1-to-1. So that type of increase in breadth as the S&P 500 is sitting almost right at a new all-time high bodes pretty well for the end of the year. Seasonality is starting to come into play where October to January is some of the strongest times to be in the market, at least from a seasonality perspective. You usually have the highest overall percentage return dating all the way back to 1928. And yeah, I mean, there's good setups going into earnings season. The only thing is it's tough unless your strategy allows you to hold through earnings. Earnings season will be kicking up in 2 to 3 weeks here, and especially this week starting to get into more of the high growth company names where you have the banks report and a few of the large caps, but really this is getting into the meat of earnings season.
Yeah, exactly. And just like the week before and a week and a half before, a lot of the traditional breakout setups that weren't working over the summer began to start working. So if I saw like some small caps setting up on like near the lows where it is, I would take it, and price would act as it normally would. It would break out and have a nice little pop. However, just like Luke said, heading into earnings season, I'm going to be looking to closing out a lot of those positions because I don't want to hold through that volatility. Who knows what the companies actually have in store in terms of revenue. So I'll be taking profits off the table. However, that doesn't mean that we're totally out of the market. There are a lot of names that are setting up, especially semiconductors. So if you look at the what is it, SMH over SPY, it's probably the best looking index on a relative basis.
Stealing my thunder.
I'm starting to sound exactly like you. I was like,
no,
wow, I'm like repeating exactly what Luke is saying. Oh god. Yeah.
Get yourself some semis.
Yeah, exactly. On a relative basis, it looks beautiful. Just like a nice close at all-time highs, or even relative highs. It's a really nice looking chart, and I'm looking to rotate my holdings more into the semis as earnings start to pop up. A few names like apps. Actually, yeah, I think apps was related to the industry, and like Amat, like those are breaking out even before earnings. Yeah, like I said, I'm probably going to take profits on some of these positions beforehand.
Yeah, I mean, the big one this week is just semis. I mean, it's not just this week, it's kind of been the past 2-3 months. Semiconductors have been acting very well, have been one of the strongest and leading industries, especially like you said on a relative basis. Basically new all-time, well not all-time, dating back to 2003, closing high on a relative basis. Yeah. And a lot of them will have earnings coming up, so that will be really the key to see if that leading this industry can continue to outperform the market, but it really overall bodes well for the S&P 500 and just for stocks, as semiconductors are a very cyclical industry, and they can sometimes be a leading indicator. Like back in 2016, the semis started to break out before the S&P 500 did, and the S&P 500 followed as those more cyclical names kind of led us higher and almost foreshadowed the move in the overall market. So, and just the Fed's cutting rates, Trump is pushing Powell into a corner to make quantitative easing and cut rates, which is bullish for the markets overall. And earnings expectations going into this earnings season have been cut and cut and cut, where it's almost leading for a surprise to the upside for a lot of companies, that due to China tariff wars, a lot of earnings across the board, earnings expectations were cut. So it's almost easier to surprise because the earnings were cut. So, and we kind of got news this past couple weeks in more developments on a potential China and US tariff deal. Overall, the market likes that, and it's sitting right at an all-time high. For me,
Should we check it out or just keep going?
I think we can go.
Okay.
Ladies and gentlemen, we got him.
How you go in?
I have a clicker.
And you put the clicker where?
I put it in down there.
In here? No?
In here.
Because the manager called me right now.
Alright. Sorry for the interruption. Pretty funny.
Had the police call on us?
Mm-hmm.
No. Where are we?
Yeah, what was that? Sector rotation?
Yeah, I mean, sector rotation, it's been real the past couple months, where a lot of the stocks that have been doing the best have been in more cyclical plays, semiconductors, more of the bank names, kind of some in energy. It's really just been almost a flight to safety and a flight to stocks that haven't performed well, compared to what usually leads the market higher are the growth names, and the stocks that have been performing the best typically continue to outperform the market. But this past week saw a small minor shift to end the week, where some growth names are getting bid up. Tesla had a big move on their earnings and had a really nice follow-through day on Friday. Big short interest there, so it could have been a lot to do with that and just increased earnings expectations. So there are some growth names out there that are acting well overall. DocuSign still setting up well. SEDG from last week or last video,
yeah,
broke out to a new all-time high, almost at $100. They do have earnings coming up though, so we'll likely be taking some profits off the table there. But yeah, I mean, overall, it bodes well for end of the year, and we're kind of expecting a nice rally into the end of the year, unless Trump starts tweeting and more the China deals start going sour, and it doesn't look like there would be a China deal. Then at that point, maybe the market will sell off. But really, especially with earnings season, be a key ticket, and the seasonality overall could help for nice gains in the year end.
Yeah, and exactly, like, especially me, I'm a little bit more new to trading than Luke is. Like, I've been doing this probably half or a quarter of the time that Luke has. So when you go through cycles like summer, and there's a lot of like distribution and stocks being dumped, like, it can be really tough in the market. So definitely understanding when to put your capital out there is really important. And if you had a hard time trading over the summer, like, focusing on these months when statistically and historically, like, there's a lot better performance, like that, this is a time to make up those losses over summer. Definitely don't do anything crazy. Try to, like, don't go too crazy with your position sizing, but just understand that the market performs best like 3 months out the year. If you agree with that, and like, striking when the opportunity arises is very important.
Yeah, I mean, it's not going to be your market all the time, every day, and unless you're a scalping day trader.
Yeah.
But very few people can do that consistently and profitably. Most of the time, you're going to have a strategy, and it will work phenomenally during certain periods of the time, and that's when you need to learn to push it. But there will also be times where it doesn't work at all, just like it has been for the past couple months for the growth names and the post-earnings drift strategy. But that's when you just reduce size, let your stops get hit, and don't try and push it, and just kind of sit back and learn to protect those gains. Because that's where, if you don't learn to protect the gains, you might have 1 year or a time period where you do really well, but then you give it all back. So the key is risk management, learning how to not only make profits, but also keep them, and know when it's your market, but also step off the gas when it's not.
Yeah, and what are some indicators we can look at to gauge like market shifts? I know one of them most definitely, and the one that we look at a lot, are the leading sectors.
Mm-hmm.
Like if it doesn't perform on a relative basis better than the SPY, there's
Right.
almost no reason to be in those names in the first place. You need a lot of factors that correlate for you to have any reason to invest in any company or trade a company.
Yeah, and that's something that I look at religiously each weekend. Is
Yep.
on a relative basis, how is the industry doing? Is it, not only is it outperforming the SPY, but is it in a trend? Is it an uptrend, a long-term uptrend? And can individual stocks within that sector outperform the S&P 500? Because usually what you'll see is the best performing stocks are in the best performing industry, and that's where you make a lot of your money, especially when you can time them, which that's when post-earnings drift comes into play. Yeah, the industries in rotation, it's very difficult to time it from a short-term perspective, as rotation can happen even on a week-to-week basis. But when you zoom it out to a weekly chart, or even just take a longer-term daily time frame, longer-term uptrend, longer-term downtrend, it's easier to identify which stocks are performing well. And you can just look at what stocks are at the top of the 52-week highs list. What stocks have RSI greater than 70. Not necessarily that you're going to buy them when they have an RSI greater than 70, but it just gives you an indication of what stocks the market is bidding up.
Yeah, and exactly. And traditional wisdom would say that oversold stocks are something you want to stray away from, but I was listening to a podcast and the guy said the data actually indicates against that. Sure, on the short-term basis, if a stock is oversold, maybe the preceding performance is not that great, but once you look at a longer time frame, RSI stocks over 70 are the ones that outperform the market. So, you know, definitely avoiding conventional wisdom and looking at the raw data is a little bit better, you know, than just blindly like hearing, you know, those conventional things and just following them. So a lot of the, like we were talking about this today, a lot of the edges that were formed like back in the 90s or back in the 80s are absolutely degraded. So when you have to be extremely dynamic in the market and figure out what works, because it always shifts. It shifts constantly.
Yeah, buy high and sell higher.
Exactly, yeah. Buy low, sell high. You know, it doesn't work all the time, and it's so easy to say that, but you know, if you look at the charts and you do this a lot, you'll realize that that's not the case.
Yeah, and I mean, buy high or buy low and sell high does have its place, and you can still make it work from a value investing perspective. It's just on a repeatable basis, unless you're diving into the fundamentals and you spend hours upon hours, like Warren Buffett, reading 5 hours plus a day about these companies, diving into their 10Ks, diving into their 10Qs, and finding little nuanced edges and mispricings in the market. It's very difficult. Like Ibrahim was saying, all the data out there shows that stocks closest to their 52-week high, stocks closest to their all-time high, continue to outperform the market year over year, and that's really even during bad times through good times. And the S&P 500 itself is almost a momentum 52 weeks high indicator or index, because it takes the top capitalized stocks within the U.S. market and rotates them out if they fall under a certain market capitalization. So in theory, the S&P 500 itself is a momentum trending 52-week highs, almost index, and that is the market, and it's very difficult to beat the market. So I think it works really well, the 52-week highs and all-time highs list. Of course, you'd have to find a strategy and a pattern that works for you. You can't just go blindly buy anything that pops up.
Exactly, and then understanding entries and exit is very important. You know, like especially when there's a lot of rotation going on. Like you can't just buy it and then sit on it. It's something that you have to monitor. Like if things are changing, because a lot of growth names get destroyed like very fast. So if you're sitting on a position and you're up 20%, all that can be gone in one day. Literally like one red candle that takes out 1 month of gains. So it's something you have to be very vigilant about.
And that's where stop losses come in.
Exactly, yeah. Taking profit and trailing your stops is very important.
Yeah.
So a few names that we're looking for the week. So the next time we shoot the video, we can kind of talk about the performance. I think Lulu was one of them. They didn't report earnings yet, right?
They reported about a month ago.
Oh yeah.
So it's in post-earnings drift. It had a nice pop to a new all-time high, new 52-week high, and it consolidated, pulled back a little bit to the rising period moving averages. It moved back up towards the high of the breakout on earnings day, and now it's just consolidating tightly right at all-time high and right at that previous high of the earnings day. So it looks like it could potentially break out, and it's been one of the strongest stocks in the market. Consistent 20% revenue growth quarter over quarter, and we saw on a relative basis XRT over SPY, the retail ETF, is looking like it could be bottoming, where not saying to go buy retail, but Lulu is retail, but so that there is potential tailwinds to push that stock towards new all-time highs.
Yeah, and I think we pulled up the market cap, and it's just absolutely ginormous. Like, what was it, 10 billion?
It was like 27 billion.
27 billion for leggings. Like, come on, man, that's crazy. Yeah.
Just for sweatpants.
That's what yoga pants?
Yoga pants.
Yeah, yoga pants. Yeah, big market apparently. Yeah. Yeah. Any more to talk?
For me, it's really just preparing for earnings season. A lot of my strategy is based around stocks that pop and break out on earnings. There are a few, DocuSign continued to repeat it, but it reported very strong earnings, gapped up, it's in post-earnings drift, it's pulling back to rising period moving average. Weekly is looking really, really nice as it's about to break out on an IPO base. They don't report until December, so you still have a nice window in order to see if it will move, and before you have to potentially lock in some of those profits going into the earnings announcement. Another one, NTRA. It just continues to go up and to the right. It's not the prettiest, and it's not necessarily in the leading industry, but there's very few stocks that I'm looking at because I don't want to enter a position when a stock reports earnings within the next 2 to 3 weeks. So it's mainly Docu, Lulu, NTRA. There was GLPG, Galapagos Biotech, that reported earnings last week, potentially going to enter post-earnings drift, and then Pro Software.
Oh my God, yeah.
Had a huge volume bar day where it initially gapped down on earnings. Buyers came in and supported price, had its largest volume day ever, and closed near the high of the day for that candle. Looking for some potential follow through. The only issue is software. It hasn't been leading in the intermediate term. From a longer term perspective, it's still a leader. So that's the only knock against Pro Software. But mainly just heading into earnings season, next couple of weeks should have some nice leaders emerge that could help push those gains into year end.
Yeah, exactly. And especially in the beginning of the year, a lot of the post-earnings drift breakouts were working. Over the summer, the performance kind of degraded, but it looks like going into this earnings season, so we can kind of take the traditional approach and kind of expect those price action breakouts to respect the 22 and continue to trend higher, as like a lot of things are pointing towards it, like the market at all-time highs again, like what is it, XRT, and then SMH like closing at all-time highs. So
and water. Faux overspy. Michael Burry whispering in your ear from The Big Short.
Yeah.
Go buy water.
Dang, I wonder if he actually made good on it.
I'm sure he did.
Yeah. Anyways, this week, like we didn't say too many tickers because, like Luke said, we worry about the performance after they report. So if we make a follow-up video, we can kind of run through like the performance of how it turned out, because there are a lot of stocks that are reporting this week that are more favorable to what we want in the market. Last week, a lot of financials were reporting, but it's not necessarily an industry that we focus on, or at least that Luke focuses on. I don't focus on it either, but yeah, that's basically it. Hopefully this week we can perform well and we can brag about it next week. But we'll see how it goes.
Cheers to Hatch and huge gains.
Yeah.